So let's now understand in detail what is regulation and what uh, the standard means by when they say audit regulation altogether. Firstly, what we are learning in audit is a statutory audit. A statutory audit is where major companies, specifically big companies, large or medium or larger enterprises, are required to have a statutory audit. There are exceptions for these major companies. If your company falls under a small company category, then you are exempted. Then you are exempted from the audit. Now, when it comes to small companies, there are certain limitations that the Companies Act says is that a small company could be something which is of a relatively smaller size, less number of employees, less than 50 employees, less number of turnover, so less number of asset size, etc. We don't need to go very much detail into that, but any small company, when a company is defined as a small company, they are not required to undergo a statutory audit in compliance with the Companies Act. But however, any other companies which require or fall under the category of a requirement to do an audit will have to have an audit that has been conducted by an auditor. So in this case, what happens? Majority of the companies would want to grow, right? Like they want to grow, they want to have good amount of revenues. They don't want to call themselves as small companies. They want to be large conglomerates or corporates. Now, over the last few years, there have been multiple scandals that have emerged. Most predominantly large scandals that I can think of out of the box is Enron scandal that happened in US. In UK, the Carillion scandal. In India, the Satyam case, the Satyam scandal, which happened quite a long time back. In US again, there was, the WorldCom scandal. There were multiple scandals that have happened over the past. Like we can relate to a lot of scandals that have happened in the past. Now, Enron or Carillion, they are all, big companies, and they were being audited, in fact, by Big Four organizations. Enron was audited by, Arthur Andersen, which is not there anymore. But these scandals, right? These scandals have actually brought the audit profession under close scrutiny. From whom? From the investors themselves, from the businesses, various other businesses, regulators like government, and various other folks. So, if you think about it, right, like we said, the auditor. Now, the auditor, what he does, he audits the subject matter, which is the financial statements, right? The financial statements. So, the financial statement is prepared by the management, and he gives an opinion to the shareholder. Now, this shareholder himself is the one who actually appoints the management, and he is the one who actually appoints the auditor also. Now, what happens in this case? When auditor is not performing his duty very well, where there could be case of number one, low quality, where he is giving inappropriate opinions, where in fact the audits were not appropriate or the transactions were not appropriate, he gave an opinion of true and fair. Number one. Second, he is doing fraudulent activities by tying up with the management, and this is quite easily possible. So he and management do a handshake and say that, let's defraud or let's fraud the shareholder. Let's fraud the shareholder. That has also happened in the past. Specific cases, Arthur Andersen. Arthur Andersen had close ties with the management of Enron. And even though Arthur Andersen were able to identify a lot of scams that happened in Enron, they didn't speak about it. They found ways to navigate through the accounting irregularities and loopholes and hid the transactions. So when an auditor himself, who's supposed to be an independent expert and give an opinion to the shareholder and give an opinion to the investors, if he himself is not doing the work properly, what will happen? Who will regulate him? See, the shareholders, they cannot go and regulate the auditors themselves. If they are the ones who are going to regulate the auditors, then there's no purpose of appointing an auditor, right? Like the shareholders can appoint someone internally and do something else, right? But they cannot do that, and the shareholders are scattered all around the globe. Just imagine in Enron, people would have invested from various parts of the countries as well as outside the country as well. Take a case of any company in India, listed company in India, they are getting investors not just from India but outside Indian jurisdiction as well. So a shareholder who's sitting in US, who is invested in a company in India, he cannot appoint someone and expect him to do the job, right? Like expect that auditor to do the job. So audit as a profession have to be regulated. It has to go through a regulation. And it has proven over the fact, and it's still being proven recently with a lot of things that's happening with the companies becoming more complex and companies going global beyond their range of services. It's very important that audit as a profession is being regulated and is being scrutinized very deeply. And hence that's the need of the regulation. That's why there is a clear case need of a regulation. I can think of a very good example very recently, that has happened is, if you think about the Byju's and Deloitte the case. Deloitte resigned from the services. Why did Deloitte resign? It's very, very unlikely that an auditor actually resigns from a services to like a big ticket revenue company like Byju's. But why still Deloitte resigned? Because they know that if they continue and they found some malpractices, Deloitte will have to become penalized in front of the regulations. So the regulations will work. Regulations will make the auditors penalized for faulty or low quality audits that the auditors are giving to the shareholders. And why it is necessary that auditors have to get penalized? Last class we discussed that auditors are only giving a reasonable assurance. Even though they are giving a reasonable assurance, the reasonable assurance have to be appropriate. If they are not doing the work properly, even the reasonable assurance is a falsified assurance, it could lead to various investors going and again and investing in a business which technically is a fraudulent case, and they will lose the money. There have been one single lot of majority investors who have lost their entire capital, entire investment, their entire money in companies like Enron. And there have been investors who have actually committed suicide because of this Enron scandal. As well as the Satyam case. So it is very important that audit as a profession gets more and more regulated, even with the current situation, with the current scenario where companies are becoming more and more global. It is very easy for a company to become a limited liability company now, and many investors are actually interested to invest their money in limited liability companies. So audit as a profession have to be regulated and have to be scrutinized, and it has grown very significantly in recent years. So we discussed why auditor have to be regulated, the reasons why the auditor have to be regulated, and we can just quickly summarize the reasons, what we discussed so far. So why the auditor have to be regulated is basically because of businesses are becoming more complex and global in nature. Complex and global businesses that are emerging over the recent past. Past scandals can be a major example why in future the audit have to be regulated. Laws and regulations, where over the previous years the laws have been less stricter towards the auditor, have to be made more stricter. So I would put it as a re-examination of the laws and regulations. Re-examination of laws and regulations. Moral code, we can call it a moral code, where it is purely internal to the auditor's self, which individual that irrespective of whatever the external law or legal says that audit as a profession need to have a certain code which have to be applied so that they themselves don't cross the borders. Then, we can also say that common standards that are established versus rigid rules versus the rigid rules. So when we are doing an audit, we do it based on the international standards of auditing. That standards are established in such a way that they follow the procedures and perform the standard procedures which will result in a quality audit. But there are instances where either the standards are not being followed very strictly because there is nobody to look at the auditors. So hence, there has to be a case of rigid rules and regulations that will enable the auditors to follow the standards very strictly. So that is very important. So the common standards or the international standards of auditing are established in such a way that they are forming a general practice. They give us principles and practices which are more flexible. Like any company, they have to look for any company. They cannot say we'll take the standard and establish only for one company. They need to include all company and across the globe. So if that is the case, then the standard have to be more of a common ground. It cannot be very specific to a company. But the rules and regulations that regulates the auditor have to be stricter. So the common ground and the rules and regulations have to follow a sync to enable the auditor follow the international standards of audit as well as which will help them to conduct the audit in a high quality manner. So these are the major reasons why an audit profession have to be regulated. Now let us understand how they are being regulated, like how the audit regulation works in this situation, like how auditors are being regulated majorly in two broad areas: national and international. National and internationally. So at a national level, there are national laws and regulations. So there is national legislations and laws. So for example, the Companies Act. So the Companies Act is the act that was, or the legal act that is established by each of their own national country to regulate the companies, at the same time to define who can become an auditor, how they should be an auditor, and the regulations relating to the auditors, etc. all are defined in the Companies Act. So the Companies Act is established based on the legal legislations of the ruling government or of the jurisdictions of the country. So they in fact becomes the primary most, or the I would put it as on the highest most authority in terms of the regulations of the auditor, because in Companies Act establishes like whether the company requires an auditor or not. Just say for example in the Companies Act they say that there is no audit required, then regulation will not work at all. Companies need not be audited at all, then there will be no profession called as an auditor. So the first primary most regulation comes up in Companies Act. Then there are national regulators which are established in the purview of Companies Act itself and passed as a separate act altogether in the legislative assembly of each of the country. The national regulators, you can give an example in it's a countrywide, like each of the country, the auditing profession vary. And in each of the country, the accountants and auditors are subject to strict legislative regulation and also professional regulation as well. Like to give you an example in UK, auditors are actually regulated through ACCA. They are regulated through ICAEW, which are, even though professional bodies who regulates the profession of auditors, but at the same time they are one of the regulatory body established in the country themselves to regulate this profession. In UK, there is also another government related regulatory council which is called as the Financial Reporting Council, the FRC. The Financial Reporting Council was established as part of the various scandals that was emerged and part of the UK's corporate governance code, which actually goes and inspects a lot of audits that have been conducted by the Big Fours and penalizes these auditors. We'll study FRC in detail in a minute, but like that there are various, each of the country have their own regulators who regulates this profession and the auditor as a profession. Specifically also to call about is European nationals, the European member states. The European member states regulates this profession through RSB. RSB full form is recognized supervisory body. So the recognized supervisory body gives authority to supervise and monitor the auditors. And the RSB is the body which maintains and enforces rules over various matters with respect to the auditor, including who are the eligible persons who can be appointed as a statutory auditor, who can conduct the statutory audit work, what defines a statutory auditor, what are the profession that is required to have to be enabled in a statutory auditor, etc. All these are actually established by the RSB. RSB's purview also came into force something that is called as RQB. RQB is recognized qualifying bodies. RQB is recognized qualifying bodies which tells that which professions from which professions auditors can be practicing. Like to give you an example, RQB's members are ACCA, ICAEWs, ICAS, Institute of Chartered Accountants of Scotland, etc. These bodies, like professional bodies, are members of the RQB and they are members of the RSB. Now this RQB says that who can be a member of the RSB, because they have recognized certain qualifying bodies which are approved by the government, and only members from them can become a audit professional. So firstly, the legislation and the regulation starts from who can audit the company themselves, like who can audit the company. So those regulations starts through RSBs, RQBs, etc. You don't have to learn all this in detail, but just understand how the regulation works. Internationally, there are international organizations that actually establishes standards and practices to regulate the audit. Major such organization is called as IFAC, International Federation of Accounts. International Federation of Accounts is a global body which consists of all the professional accountants around the globe. If you want to practice as a audit professional, you have to be a member of an IFAC. To give an example, in India, CA is a member of an IFAC. UK, ACCA is a member of an IFAC. Like that, there are professional bodies like we have in RQBs, which is specific to European nationals. Internationally, they have to be a member of the IFAC to conduct the audit across the globe. IFAC issues have something that is called as ISAs, the International Standards of Audit, which is again issued by IAASB. So IAASB is International Auditing and Assurance Standard Board. They issues the ISA, which is supposed to be used by the auditors while they are conducting the audit. Like this national regulations, like this national legislations and laws, like the international boards, there are national standard setters as well. National standard setters as well. Like IFAC is an international, IASB is an international standard setter, which issues ISAs. Even in various countries, there are specific to the country standards which are established by certain regulatory bodies through which audit have to be conducted. Like for example, in India, we have something called as NFRA, which actually regulates the auditors, and also they issue certain standards, Indian I'm just going to call it as separately as Indian auditing standards. Auditing standards. And only through these Indian auditing standards, the Indian profession can be regulated. Like in UK, we have FRC, which also suggests the UK specific standards. Like ICAEW, we have certain specific auditing standards as well as certain specific accounting standards which are established to audit these specific companies, and there are specific processes that is established which will help the auditors to audit these companies, and what are the process they have to follow. So we talked about the national legislations, national regulations, national standard setters. We also talked about international regulations and international standard setters. Finally, the other area and the biggest area is professional bodies. So professional bodies cannot just give qualification for someone to become an auditor, but they are also supposed to regulate the audit as a profession. How do they regulate the audit as a profession? Through education. Like, not everybody can become an auditor. Like, let's say, for example, you have not completed the ACCA, you cannot go and audit and sign the audit of a company, sign the accounts of financial accounts of the company. You have to first complete an ACCA, become a member, and become a member of the professional body. Only then you can, become an auditor. Through continuous development, like we have, even though I am a member, in fact I am a fellow member, I still have to complete a specific guidance on continuous learning and showcase to ACCA that okay, I have completed this training and I am actually deeply involved with my learnings, etc. They do have certain ethical guidance which we will learn in the next chapter, but certain ethical guidance and practices through which the professional bodies have to conduct themselves to qualify themselves as an auditor, they have to follow these practices and ethics throughout their professional career. By any chance, if you are identified as an unethical person, or you have not met the ethical expertise well, you can be penalized. You can be removed from the ethics. You can be removed from the membership as well. There are also experience requirement, which is required to be fulfilled for you to become a member, right? So you need to fulfill the 3-year experience, in fact, for you to become a member. So even experience can be called as an auditor. So likewise, there are various regulations out there which will require for you to, which will be required and established by the government as well as certain professional bodies and as well as international bodies who will regulate our audit as a profession, which will regulate audit as a profession. So that now we have learned who specifically regulates the audit profession as a whole. Let's talk in specific to that of UK. Like, let's talk about the overview of UK's regulatory framework and talk about a few regulations that's specific to that of UK. So I'm going to discuss about overview of UK regulatory framework. Now in this, the UK, which is the EU's 8th directive on the company law, any person who's supposed to carry out statutory audit must be approved by the authorities of European member states. So I'll put it as any person carrying out, I'll put it as anyone carrying out the statutory audit, I'll say stat audit, must be approved by the EU members state. So the authority to give this approval in UK is delegated to the recognized supervisory bodies. So this authority, like who can be the approval of this authority, is delegated in UK to, so this is delegated in UK to someone called as the RSB. RSB is what? Recognized supervisory body. So RSB is recognized supervisory body. So this recognized supervisory body can give the approval to act for any person to act as an auditor. So an auditor must be a member. So an auditor must be a member of this RSB. So if you want to be an auditor of UK, you have to be a member. Auditor must be a member of RSB. Now, who are the members of RSB? For example, ACCA is a member of RSB. If you are an ACCA, then you will automatically become a member of the RSB. ICAEW, you are a member of RSB. So as an ACCA, if you have become a member in ACCA, you can go to UK and you can practice their audit profession. So because you are a member of the RSB, and you have the governing body of your ACCA can be eligible under its own rules to manage you as a person, audit as a profession, and ACCA can actually scrutinize you and come up and see whether you are actually performing the audit profession very seriously. Now the RSBs are required by the Companies Act to have rules to ensure that the personnel eligible appointment as an auditor are either individuals with an appropriate qualification and firms are controlled by qualified persons. So as per the RSBs, okay, as per the even though there are RSBs, as per the Companies Act which is part of the national legislation. So as per the Companies Act, the RSBs are required to ensure that persons who are eligible for appointment as a company auditor are either, so I put it as per Companies Act, as per the Companies Act, the RSBs are required to ensure that persons who are eligible to audit companies, are one qualified individuals. Okay, qualified individuals. So qualified individuals means what? They have an appropriate professional qualifications. The firms are controlled by qualified individuals. So controlled by qualified individuals. So these are the two things that you need to follow. One is that as an individual, if you want to be called yourself as an auditor, you should have appropriate qualification. Second, the firm you're working for should be controlled by qualified individuals. You cannot work for a company which is actually where the partner is not an audit, is not a member of RSB. He is just an accounting graduate, and he is conducting the, and he is performing the audit and saying and signing off the authorities, and that will not become valid. So it's very clearly mentioned in the Companies Act of 2006 that any auditor have to be having appropriate qualifications under the purview of RSB. Second, the firms have to be controlled by the qualified persons. So with this, as I told you before, automatically whatever specific national regulations have been established, they are established under the purview of Companies Act, which is a national law in each of the country. So forming on this basis, right, on this basis is where there are separate councils which are established by the government to ensure that even though the auditors are forming part of the qualified individuals and are approved members of the RSBs, to ensure that they are giving quality audits, there are government councils which will investigate these qualified members. So even though we are a member, as an auditor, I am a member of the RSB. So just because I am a member of an RSB doesn't mean that I will be upholding the quality of an audit profession. So to ensure that I as a member is upholding the quality of a profession, and if I am auditing a big company, to ensure that the company is being audited with high quality, FRC, called as a government council, independent council, will come as a regulator to oversee the RSB members, to oversee this auditors. So FRC board was established after a lot of scandals, and that's what we are going to learn in the next topic. So next what we are going to learn is all about FRC. The FRC full form is Financial Reporting Council. So FRC was established as part of the UK's Corporate Governance Code, through the UK's Corporate Governance Code, and FRC comes as an independent regulator, for corporate reporting and governance. So they oversee the work of the auditor. They will take up the Big Four organizations and public limited companies audit that have been completed. They will go and check the audits that have been completed for these public limited companies and see whether they have been completed as per the utmost quality or whether there have been any shortcomings. If there are shortcomings, they will fine and penalize the auditor. Over the past few years, FRC have penalized KPMG, Deloitte, specific to that of European nations and UK, where they have identified low quality audits, etc. Even in India, NFRA have actually debarred a lot of chartered accountants over the past few years, where they have conducted frauds or they have not uphold the ethical guidance of the professional qualifications. So FRC council, which is similar to that in UK, a similar council which is established in India is NFRA. So NFRA is a strict kind of a mirror image, kind of like from FRC itself. FRC is a Financial Reporting Council. And what are their major objective or the role is to ensure they set high standards for the corporate governance, to set high standards for corporate reporting and actuarial practices, to monitor and enforce accounting and auditing standards, to oversee regulatory activities and actuarial profession, to operate independent disciplinary arrangements for public interest cases. So because various investors out there are actually investing in public limited companies and their money is actually out there which will get depleted, FRC comes in and oversees the auditors and checks whether the auditor actually doing the work, and they also check the companies themselves, and if they find any shortcomings, they will come and penalize them. So FRC, what they do is they have a board, and this board are broadly divided into two aspects. This board is broadly divided into two aspects. One is a conduct committee. And another is a codes and standards committee. So conduct committee, then second is codes and standards committee. In conduct committee, they have various committees like corporate reporting. I'll write it as CR review committee. So corporate reporting committee, which specifically talks about the corporate reporting aspects of the company, like the standards that they used for accounting, etc. Second is, which is more I would put it as, which is more relevant to us, is the audit quality committee, audit quality review committee. So audit quality review committee. These audit quality review committee goes and checks a lot of auditors and does a lot of penalization work and kind of debars a lot of auditors. Then there is case management committee, which takes specific cases, fraud, scandals that have happened and reviews them in detail. As part of these committees, there are also financial reporting review committee, and there are various tribunals as well, which takes up the cases of this, and kind of like a court of law they function, where they kind of question the companies as well as the auditors, and kind of like come to a conclusion whether who is under the fault here. So there are tribunal cases where they hear out the penalized auditors as well as the penalized companies, etc. That is called as conduct committee, to ensure that proper conduct is maintained by the auditors as well as the companies with respect to the financial reporting as well as audits. As part of the codes and standards committee, there are audit and assurance council. So there is audit, I will put it as AA council, which is audit and assurance council. Second, corporate reporting council. Corporate reporting council. And third is actuarial council. So I'm not going to talk in detail about actuarial council. Actuary is a profession in itself which gives kind of like insurance valuations and actuarial valuations, which you would have studied in your SBR topic, like employee benefits, where they kind of using actuarial methods kind of identify what is the value of the employee benefits, etc. So majorly insurance company uses this actuarial, and actuarial valuation is a very important, and it's kind of a very I would say can be manipulated valuation, and hence the independent agencies are there which comes in and checks this actuarial activities that are provided by various insurance companies, because easily fraudulent cases happens through insurance as well, and insurance is something that actually goes and touches various people out there. The other part is that FRC is in the process of being replaced. So they are being replaced or are in the process of being replaced. Something new is coming up which is called as ARGA. ARGA. The full form is Audit, Reporting and Governance Authority. Audit, Reporting, Governance Authority. Audit, Reporting and Governance Authority. So Audit, Reporting and Governance Authority is something that is being replaced, and we will be studying about this ARGA in detail in chapter 16, which is part of the current issues as well. So national legislation and national regulation, as I told you, national legislation, the Companies Act actually is the primary one which actually establishes who should be an auditor. National regulation, as I told you, there are regulatory bodies which are established by various countries out there to regulate the audit profession, oversee the audit and their governance, etc. Now we will talk in a bit detail about international standard setters. International standard setting. International standard setting. The international standard setting, through which we as an auditors and AAA students are supposed to learn a standard that is called as ISA. ISA is International Standards of Audit. So International Standards of Audit. So this International Standards of Audit are actually produced by International Accounting and Assurance Standards Board. It is a technical committee of International Federation of Accounts. International Federation of Accounts. There is another standard which is called another technical committee which is called as International Accounting Standards Board, IASB. What do they produce? Something that you use to account, to prepare the financial statement, IFRS, International Financial Reporting Standards. So those financial reporting standards, International Financial Reporting Standards, are prepared or produced by IASB, which forms part of the IFAC. Similarly, ISA is produced by IAASB, which is International Accounting and Audit, International Auditing and Assurance Standards Board. So IFAC, which is the ultimate governing authority, which is called as the International Federation of Accounts. They have various technical committees like IAASB, which is called as International Assurance, International Auditing and Assurance Standards Board. Then they also have something called as IESBA. These two you are supposed to learn, and because this is the bloodline of the AAA. IESBA is called as International Ethics Standards Board for accountants. So IAASB, International Auditing and Assurance Standard Board, establishes various standards. ISA, which is the International Standards on Auditing. So using ISA and as per the standards or processes established by ISA is how you're going to conduct the audit. So IFAC automatically tells you what you should do. So rule is where rule setters are the ones who sets the rules. So automatically, if you are following the rule, automatically the people who are setting up the rules are your regulators. So ultimately, IFAC tells the auditors how they have to conduct the audit. They are giving rules and regulations on how the audit have to be conducted. So automatically, if you are using that process and the rules to perform the audit, you are using ISA to perform or conduct the audit. IASB becomes our regulator and IFAC also becomes our regulator. And as per the Companies Act or as per any auditing profession, you cannot conduct an audit without following any standards. You have to follow any standard. It could be country specific standard or international standard as well. If you are in India, you have to follow the Indian standards of auditing. If you are in UK, you can follow the ICAEW, the UK auditing standards, or you can also follow the international auditing standards. You can, if you are in Middle East, you can follow the international standards of auditing, and you can follow the Middle East standards of auditing, etc. So every country either have their own standards they have established, which you are supposed to follow, or you have to follow the international standards. In India, if you are auditing in India, you have to follow only Indian auditing standards. Like in US, you have to follow only US standards. And US auditing standards, and you cannot follow the international standards. Like but whether there are dual responsibilities that is given in other countries where you can either follow either one of them. There are like dual channels that's offered. You can follow their national specific, or if you want to go for international, you can follow international. The reason why people follow international is because they are multinational corporations. Like there will be one major company which have subsidiaries all around the globe. So the major companies will be audited through the international standards of auditing. So they established, IASB established ISAs, International Standards of Auditing. They established ISQM, International Standards on Quality Management. How a quality audit can be conducted is part of the standard of ISQM, which you are required to know. Then we have something that is called as ISRE, International Standards on Review Engagements, which we'll also learn in a specific chapter, other assurance engagements or review engagements. Like other than audit. So audit forms part of the ISA. Other assurance engagements like review engagements or other assurance engagements which are not audit will form part of either ISRE or ISAE, like International Standards of Assurance Engagement. This also form part of assurance engagement. Now, assurance is a broader scope. Audit is part of an assurance. For audit themselves, we have a standard. For other assurance engagements like fraud consultancy or internal audit consultancy, there are various other assurance engagements where we fulfill assurance, international standards of assurance engagement standards. There are specific review engagements which are limited scope or limited assurance, where we can use the ISRE standards for conducting the review engagements. And then we have something that is called as finally ISRS. ISRS is international standards on related services, like other related services which you don't have to learn, that much. So related services, I'll put it as related services. Related services. And Q is quality management. Now for your exam, you don't need to remember all the ISAs or numbers. If you ask me, I myself don't remember the numbers and all. ISA numbers or the ISA quotations, etc. But it's important that you understand what are the terms which is mentioned, and if you can use the terms, as you know, professional marks are 20 marks, you will be able to score more marks. It's better to have a summary of all the ISAs in one hand and try to apply them when you are actually practicing it. It's a good practice, because once you enter into the audit profession, after a point of time, you are required to be more, quote more standards, which is the rule book. In ISBA, which is International Ethics, ethics establishes codes of ethics for professional accountants. So they establish, IESBA establishes specific codes and ethics for professional accountants which they are supposed to follow, and through which they need to ensure that their ethics is upheld and maintained throughout the process of audit or throughout the process of their accountants. If you are functioning as an accountant or as an auditor, accountant for a company or an auditor, then you are automatically under the purview of IESBA. And whatever the standards of ethics that have been established, if you're not following the ethical considerations, then you can be penalized by the regulatory professional body that you are part of, because ACCA have taken the IESBA's code of ethics and imparted them in their regulatory profession. So the ethical standards that is established by ACCA is coming from IESBA, and ultimately if you are not following them, you will be penalized. You can be penalized. Now even the IFAC is also overseen or regulated by someone, and that is called as Public Interest Oversight Board. So PIOB, which is called as Public Interest Oversight Board. So this Public Interest Oversight Board actually oversees the public interest activities, including its standard setting bodies such as IAASB and IESB. So the Public Interest Oversight Board oversees IFAC, including the IAASB and IESB, the ISBA. So their major work involves monitoring the standard setting boards, overseeing the nomination process of how the members of these boards are appointed, cooperation with national oversight authorities, etc. So each of the country will have their own oversight committee, which is established to oversee the national standard setters, etc. Likewise, in international financial International Federation of Accounts, they are overseen by the Public Interest Oversight Board. So this PIOB, their main office is in Spain. So they are focused on IFAC, which is international. Now they mainly focus on the international standard setters. Like the international standard setters is what they are overseeing, right? Like in European, there is something called as CEAOB. CEAOB is Committee of European Auditing Oversight Board. Committee of European Auditing Oversight Board. So this CEAOB regulates or oversights the European National Audit Authority. So they oversee the European National Audit Authorities. Okay. Specifically, so we have talked about international, we have talked about now European. Now in UK, the oversight is done by professional oversight team. So there is a team called as professional oversight team, which is part of the UK's FRC. Now this FRC oversights the national standard setters, like the national statutory auditors established by the RSBs. They oversight them. The supervision of International Audit General, changes in the auditor notifications, etc. All of them are done by the UK. In UK, it is done by the professional oversight team. So this is what they do. Now in US, there is something called as PCOAB, which is Public Company Accounting Oversight Board. This was established after the Enron scandal as part of the Sarbanes-Oxley Act, SOX Act. So this Public Sector Oversight Board, the Public Company Accounting Oversight Board, is a private body which is established in USA, created by the SOX Act. It oversees the audit of the public companies. What do? They oversees audit of public companies. So if you are, let's say, KPMG in US and you are auditing a public limited company, a big public limited company, let's say for example Apple of US, the audit of Apple could be overseen by the PCOAB, and PCOAB establishes fines and penalties for the US auditors. In UK, it is the public oversight team of UK's FRC. So it's the FRC themselves which actually have established a team called as Public Oversight Team, which oversees the audit of the public companies, and they also regulate the auditor, statutory auditor, by the RSB. The PCOAB actually also established a strong foothold of independent auditors reports. They look at the independent auditors reports, they look at a lot of regulations and see whether the audit is done properly, etc. They in fact rank the big four organizations according to which is the best, etc. What they have done, what are the lease and penalties that they have got, etc. So this is how the regulation works in an audit profession. So as you can see, we are whatever the professions that we are doing is actually regulated by a lot of people out there. So what we are doing is something very important and is a responsible task that we are carrying out on our shoulders. So always remember this and be ethical.